What's up, everyone? All right, so in today's episode, I'm going to break down my trades from the morning. I was able to break the ice. I got a few trades today, but I didn't make a lot of progress. It was a fairly choppy day. So here's the issue. The market obviously is very cold right now, and it seems like even stocks that have decent news, people are too nervous to jump in. And so there's not a lot of people buying. And actually what's worse is that a number of brokers are restricting trading on a lot of these small cap stocks. We're seeing it at Webull, which we hadn't seen previously. We're seeing it at Thinkorswim. We're also seeing it with some of the offshore brokers. And so what that effectively does is it blocks off that stock from anyone being able to buy it. But, you know, one of the things is usually short sellers are not using Webull or Thinkorswim. They're using these more obscure brokers, and I would suspect that those brokers are not disabling trading. So essentially what you have is almost a system-wide imbalance that's more to the sell side on some of these stocks because of the restrictions. You just don't have as many buyers that can participate in the market. So it reduces total demand, the supply being what it is, and then additional short selling flips that balance, and that's why we're not seeing as big of moves. Now, of course, if we ended up having a stock that had a really great catalyst, even if not as many traders could participate in it, the underlying catalyst being so strong would likely send the stock higher and shorts would get squeezed out. We just haven't seen that happen yet. So this morning, I got a little excited when we had a stock ALBT that was up over 100% on the day. This was pretty impressive. I'm going to jump onto this on the screen share. We could start breaking this one down first. So ALBT is a little too cheap, as you can see. This is not my go-to price range. I don't usually like trading these lower price stocks. However, I can't deny the fact that this thing went from 40 cents a share all the way up to $1.10. I was impressed. And so as I watched it, it first broke $1. And usually when stocks break over $1, that's when I start getting interested, because when they trade over $1, they trade down to just 1 penny spread. So in other words, it's $1.07 by $1.08. Oops, sorry, 08. However, when it was down at 88 cents, for instance, it could be 88.15 by 88.16. Every penny trades down to the 1/100th of a penny when they're below $1 a share. So below $1, this is, what am I doing here? Below $1, that's, I'll just do the arrow, that's easier to see. Below $1, and then above $1, we get, 1 cent spread, and this is, I'll just do it like this, 1/100 of a penny spread. And so the result is that on these lower price stocks, when they're down at 75, 80 cents a share, they tend to move a bit more slowly. Now, as the case was this morning on ALBT, this one popped up so quickly that it sort of jumped all of a sudden from 40 cents to 50 to 60, all the way up to 75, 80 cents. And then as it squeezed up here to $1, it broke through really nicely. So when I saw it moving that quickly, I pulled up the scanner right here after it hit, or I pulled up the chart and was looking at the level 2 after it hit $1.10. And I was watching for a dip, and it hit $1.10, it dipped down to $1.07, and I was like, I hesitated. I was like, maybe I could. And I said, you know what? It's really not the right price. What are the odds that this thing actually squeezes? And you know what? It ends up going from $1.10 right there to $1.30. And I missed 20 cents a share. Ugh, bummer. So then it pulls back, and I'm watching it here, and I drew this line right connecting those two dots. It's an ascending support line. And right here, it dips below that line, and then I thought it was going to sell off, and it gets right back above that line, and I say, you know what? I'm going to punch it. I jumped in there to $1.18. I was looking for an immediate breakthrough, $1.25, and a retest of $1.30. It went up, as you could see here, only to about $1.23 before stalling out, and I sold it. I made $48.76. All right, that's a very small winner. However, I will be red on it due to fees and commissions because I'm not trading with commission-free brokers. So this ends up being a small red trade. And then it dips down a second time, and then it comes back up, and then it breaks through. Well, that was what I wanted to do right here on this candle, but it couldn't. So then it ends up going sideways here for a little bit. And as we've gotten now into the opening bell, it started to pull back and is right around $1 a share. So $48.76 on my first trade today, and on my second, I'm up $13.15. I am setting records. This may be my smallest green day of the year, and I'm green in gross profit, but I will be red here in net profit after fees and commissions. This is, of course, in my my Lightspeed account. So on NDRA, this one was on the scan earlier, had news at 8 a.m. So NDRA comes up with headline here. It was at 8 a.m. And it's got a sub 1 million share float. It's a U.S. company, healthcare, medical diagnostics, and screening. And I'm like, okay, that's good. I pull it up. It hits 58 and then sells off. And then ALBT ended up taking the focus. That one went higher over here. So this one didn't really do anything. And then after the opening bell, it came up and hit the scanner again. And I pulled it up and I realized, well, we're actually right back next to that pre-market high. So this would be a gap and go trade. And the setup is a break of the pre-market high right here. And so I said, you know what? I'm going to go ahead and punch it. And I did. I punched it. And I had a pretty decent entry right down here at about 458-ish. And it squeezes up into a halt right here at 495. And I'm like, nice. But as it resumes, it got pretty heavy. And there were some big sellers on the ask. And I got a little stubborn. I said, you know, there are sellers on the ask. I'm going to buy those shares. I really think this has the potential to make a bigger move. I'm looking for 550, $0.50, then a move up to 6. Maybe this thing starts to open up. After all, it's a sub 1 million share float with a news catalyst. This has got high relative volume, 300x. It's got lots of room to the 200 moving average. It's the right type of setup to give us a good move. And so I got a little stubborn and I kept adding and adding. I was getting really frustrated. And this is something that I was cautioning you guys on, even actually just this morning before I took this trade. And then even I fell into it. And so I got stubborn. And although it ended up squeezing up and I did make some money on it, I ended up giving back some profit as it came back down. And so, you know, at the end of the day, I sit here and I feel like asking myself, was it worth it? You know, was it really worth it? And the thing is, you just never know. This felt like the type of stock that did have the potential to make a bigger move. Maybe in a hotter market, on a better day, it would have. And it's not to say it didn't make a move. It did, but I thought it had more in it. And I got a little emotionally compromised. I got stubborn and I got frustrated and I just kept adding. And you know, so unfortunately, you know, I'm glad I got out where I got out. I'm not still holding it, obviously. So, you know, I got out and, you know, and I was tempted to get back in. You know, after I got out, I was like, oh, maybe I'm going to get back in right here as it pops back up. Maybe. And then I just, you know, what am I doing? What are we doing here? So this is kind of the problem sometimes with breaking the ice is once you break the ice, it's easy to keep trading. And sometimes it's better just to say, I'm not going to trade at all. And in hindsight today, this probably should have been a no trade day, just like yesterday. Yesterday I said probably should have been a no trade day. Monday and Tuesday were no trade days. But after 3 no trade days in a row, you know, 4 no trade days in a row, you start getting a little antsy. You know, what's going on here? This is very unusual. It is unusual. And I let that pressure get to me a little bit. And so I broke the ice, and then it wasn't opening up as much as I thought it would, and I got stubborn. And I'm lucky that I'm green on it, because getting stubborn on a stock like this, which is now back at its low, in spite of news, you know, this if I kept adding as it kept going lower, kept adding and adding, well, that's how all of a sudden, you know, things can really fall apart. And so I'm grateful that, you know, we had a good month of January. Things cooled off in February a bit. And I'm grateful that I didn't have one of those days, you know, a $50,000 red day or whatever. But if I continue to get stubborn when something's not working, rather than just cut the loss, whatever, get out, if I keep adding and adding, then I'm going to get into a position where I'm going to have 50,000 shares, you know, or 100,000 shares in one of these. It's going to drop. It's going to halt down. I'm holding full size. Then it resumes lower, halts down a second time, right? And then all of a sudden, what do? I sell at the very bottom right before it bounces? Well, it's not like I can keep adding if I already have full size. So I cut the loss, and all of a sudden there, what do? I give back, you know, 30%, 50% of what I made in January? So this is kind of, this is definitely a big risk with trading in a cold market. You've been, it's like, how long can you be patient for? And you're patient, and then you break the ice. It doesn't work, and then you just sort of spiral. And it's almost like being on like a diet or something. I would, like you're dieting and you're being really, really, really strict, and then you're just like, screw it. I'm just going. I'm throwing it all out the window, and now I'm just, it becomes emotional, and it's like, this is just not good. So I don't like seeing stocks that do these kind of round trips. We even had a stock earlier this morning. I don't know where it is on the scans now. What was that ticker? Was it BCP? No, BPC? Well, maybe someone can type it in the chat room and remind me of what it was. BGL. We had that ticker BGL this morning. So this stock comes out with news of a $10 million strategic investment at $4 a share. So someone invested $10 million at a share price of $4 a share. Usually that's bullish. That sets the value in a way at $5 a share, right? $4 a share. Because usually when we see these types of investments, they're like, I'll give you 10 million, but I want it at 50 cents on the dollar, right? So I wanted it at a 50% discount from the current trading price. And that way I have a cushion. So if you guys screw up, I could still probably get out break even. And if it goes well, I make even more. Usually investors don't say, yeah, I'd like to pay a premium over the current market price of 100%. Yesterday, this was trading at $2 a share. Well, it's back at $2 a share now. But someone, while it's trading at $2 a share, said, I want $10 million worth at $4 a share. So that's usually a big vote of confidence. And even that headline didn't work. That's very unusual. So it definitely speaks to how cold the market is. And it is very hard to be patient, during these conditions. And, as I was sort of alluding to before, I think that the imbalance is definitely swung to the short side. The bears are in control right now. The bulls are in control during, the bull markets, 2020 pandemic, 2021 GameStop. Bulls were in control. 2022, 2023, the bears regained control. 2024, the bulls regained control, and through all of 2025, I would say for the most part, the bulls were in control. Right up until things cooled off a little bit around the decline in crypto that occurred in sort of October, November. December and January were okay, and now February has really cooled off, and we're coming all of a sudden to the last day of the month, tomorrow. So what will March hold for us? And I don't know. If March is anything like the last week has been, it's going to be pretty slow. But on the other hand, it really only takes one good trade. In a hot market, one good trade a day, I could do incredibly well with one good trade a day. But one good trade a month for $40,000, $50,000, one good trade a week for $40,000, $50,000, that can work, and that can happen in a colder market. And the thing there that's tricky is it goes hot, cold, hot, cold, hot, cold. So it's more like cold, 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 hot, cold, 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 hot. So duck, duck, goose. So you just don't know what day is going to be the goose. And all of a sudden you get a stock like the one that we had this morning, NDRA, with a sub 1 million share float, and the shorts keep adding and adding. And then next thing you know, it rips through 650 and is halted up and showing a 750 resumption, and shorts are covering. It opens, dips and rips, goes up to 8, 9. And just like that, we've got a stock in one day that went from $2 or whatever, $4 to $10, $12 a share. And then the next day will be totally dead. And the next day will be totally dead. And maybe it's dead for another week. And then all of a sudden, boom, we get a big move. So that is sort of typical of colder markets, that it's cold, 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 and then you get a big move. But usually when you get that big move becomes the catalyst, right? So you finally have a stock that makes a big move, and then the next day, traders are like, okay, well, what was the profile of that stock? Price, float, news catalyst, location of the company, whatever. So they create the profile, and now they're looking for the next one. And so now short sellers are like, oh, well, they pay attention to that profile too. better be a little careful shorting the next one because it did just get smoked here on this huge short squeeze. So then the dynamic kind of shifts. The control sort of shifts from the bears back towards the bulls. And then you can have essentially a little hot streak that goes for, it depends. I mean, but this is usually the way the sort of hot and cold streaks begin, with a big catalyst, and then they end with moves getting exhausted. Stocks that really have no business being up, still going up 200%, they become a great target for short sellers. They end up coming down. Shorts are shorting earlier and earlier and earlier until things stop going up, and now bears are in control. But this has generally been my experience, that it's primarily bullish with shorter periods of cooler trading. So, we're in a cooler period right now and obviously waiting for the next catalyst. I thought maybe NDRA had the potential to be that. If it didn't have news, I wouldn't have traded it at all. But because I had a catalyst, it's in the right sector, the price, everything checked out on it. It met the 5 pillars of stock selection very well. And it still didn't work. And that, I think, is also a reflection of the market because, trading the 5 pillars, which would constitute an A-quality setup, hot market, last month I think I was averaging 72%. But I was also trading B-quality setups, which are setups that meet 4 out of the 5 pillars. And I might have even traded some C-quality setups. So my blended average was actually 72% last month. But it's probably likely that if I had just traded A, I'd be at like 80%. This might be 70%, and this might be 60%. And I didn't take very many. But it sort of blends to this. Whereas this was, hot market. And then over here, we'll do cold market. So now cold market. Even A-quality setups maybe are only, like 60, 68%. And then B-quality are like, 50, 53%. And then C-quality is like 40%. I don't know. I'm just, but everything seems to be performing not as well. Even A-quality setups. So now you have really no choice but to drop these off. Because if you trade all of these, you're going to be down at like 50% accuracy, right? Or maybe whatever. So that's not going to work. You're going to be losing money. So then you say, all right, well, in this market, I totally have to forget about that. And maybe I need to forget about that too. So then I try to keep at 68% trading just A-quality setups. But, each month, let's say how many, each month. Let's just say, for instance, there's, 20 trading days roughly. So if we said there's 2, maybe 3, so maybe there's like 60 A-quality setups each month in a hot market. And then in B-quality setups, maybe there's like twice that, 120. C-quality setups, there's probably like 500. But, your accuracy kind of declines. So then in a cold market, I would wager that, it feels like we're seeing a quarter of this, so all of a sudden we go from 60, down to like 15, less than 1 a day, right? This is, maybe 30, but again, the accuracy is not that great. And this is, maybe 125, whatever. But so now all of a sudden you're sitting in a month where in order to achieve 68% success, you've got to only focus on A-quality setups. And that means you're only taking 15 trades. You're only taking a couple trades a week. So that can be hard to stomach. And that's where it feels really, it's like, it's hard to be patient. And I struggle with it too. And I think today's a good example of that, where part of me was like, someone asked, Ross, are you going to take any more trades past the opening bell, or are you going to switch to the Warrior program? And I was like, yeah, I think I'm going to give up. And then NDRA hit the scan, and I was like, well, okay, actually, no, this one, maybe we're just going to get that surprise wild card, and it's during regular trading hours. It's not a pre-market move. But that ended up being what it is. So I feel disappointed. I feel a little bit frustrated disappointed. I feel disappointed on to the degree that I gave into that sort of emotional impulse of being stubborn. And I know that when I get stubborn like that, while it can work out, and I guess you could say this is working out, it can also go horribly wrong, and I can get completely smoked. And if that happened right here, I would be pretty upset with myself. So maybe I call today, a caution flag, a little caution flag, like, whoa, slow down. That could have been really bad. We're coming to the end of the month, what should I do? Should I size, should I take money out of my account? That's the thing. You could say size down. Well, I wasn't planning on taking as much size today as I took. So the only way to avoid that is either to literally take money out of my account, or, what I can do, and I will do this from time to time. Let me do it on this window. So I'll go into trading and then warnings, and I can set a max position size, which I have set right now at 255,501 share. It's been there for months. So what if I bring that down to like 10,000 shares? I mean, should I even go to 5,000? I mean, I don't know. That seems pretty tight. But on the other hand, the market doesn't seem to be calling for me being aggressive, and today was a close call. So doing this, I can say do not allow when quantity is too large or when position is too big. And then if I say okay on that, if I try to take a trade, and I'll just try to do an order for 10,000 shares, and I'll show you what it says. So, so let's see. All right, so I'll just show you what this window looks like. So each time I press that, it says max position size, max order size exceeded. So it would let me take 10,000, but not more than that. So yeah, I don't know. As long as I don't, override that in the middle of trading, that certainly works. Taking money out of the account is the safest thing, because you can't change that in the middle of a trading day when you're frustrated. So yeah, I don't know. Something for me to think about a little bit. But as we sit here, we're in the trenches right now. We're definitely in the trenches, and it's tough to see, this kind of market. And it absolutely 100% feels night and day from the hot market. It feels like someone turned off the faucet. Like it's just, what happened? It's a light switch, off, gone. But that's the shift that occurred in sentiment between the bulls and the bears. And that shift is significant when it occurs. And right now we've got some, circumstances in the overall market with AI, with crypto, that are all, factoring into what we're seeing. So, I think that this is going to be a time where I need to exercise patience, and perhaps really it would be the best thing for me to move money out of my account and say, hey, good job for January. Grateful we had that. Whatever I got in January, put that aside, and now just kind of reset to a smaller account. I had reset at the beginning of January to 100,000 in my account. I grew it, did well, and maybe now I reset it back to 100 grand, or even 50 grand. And then I can't take big size on anything, even if I wanted to. The downside of doing that is on that one day a month that we actually have something that's working, I don't have enough buying power to trade it well. And I won't have those $50,000, $75,000 green days. So that can be a problem. And of course, I could still take 50,000 shares of a penny stock, I suppose, but I wouldn't be as worried about losing big money on a lower price stock either. So in any case, something for me to think about, something for you guys to think about as well. We're coming to the end of February, so it'll be a chance for us to look back at the performance for February and ask ourselves, what did we do right? What did we do wrong? And what can we do better in March? So with that, let me remind you as always that, of course, trading is risky. My results are typical, so manage your risk, take it slow. And I'll see you guys back here bright and early tomorrow morning at 7 a.m.